Imagine you're steering a ship through unpredictable waters. The sky darkens, thunder rumbles, and the compass starts to wobble. That's what May 2025 has felt like for cryptocurrency investors. Ripple's XRP is caught in a relentless legal storm with the U.S. Securities and Exchange Commission, SEC, dragging its price below $2.20. Meanwhile, Bitcoin, a once unstoppable juggernaut, has slipped to nearly $104,000, shaken by global economic tremors, particularly rising U.S.-China trade tensions. But are we witnessing a crash, or just the waves before a stronger surge? Let's set our course and examine what's really happening in this volatile crypto ocean. If Ripple's courtroom drama were a game of chess, we'd be deep in the endgame with pieces scattered, pawns promoted, and spectators holding their breath. Since 2020, Ripple Labs has been at legal odds with the SEC over whether XRP should be classified as a security. Fast forward to 2025, and the game is more intense than ever. Recently, a controversial court filing has shaken the board. Made by financial figure Justin W. Keener, the filing claims to reveal crucial evidence that could influence the case's direction. It's like introducing a surprise queen to the game, one that neither side saw coming. Adding more complexity, a judge recently denied a joint request from both Ripple and the SEC for an indicative ruling, pushing the legal fog even thicker. Investors are standing on the sidelines, unsure if the next move will be checkmate or stalemate. June 16, 2025, a potential turning point. This date looms large. The SEC must report its settlement progress to the U.S. Court of Appeals. It's as if we're waiting for a critical chess clock to tick down, signaling either resolution or another round of strategic maneuvering. If this case resolves in Ripple's favor, the implications could be enormous. It might open the gates to mainstream XRP adoption and perhaps even an XRP-based ETF in the United States. The impact of these legal uncertainties is clearly visible in the XRP price chart. It recently dropped to around $2.14, marking a significant retracement. It's as if the market is holding its breath, hesitating at the edge of a cliff, uncertain whether to fall or fly. Interestingly, while retail investors are growing cautious, institutional investors appear to be quietly buying the dip like savvy shoppers, scooping up valuable assets at a temporary discount. Blockchain data reveals that large XRP holders, often dubbed whales, have been steadily accumulating. It's a bit like a poker game. While the public folds nervously, the seasoned pros are going all in, betting on a favorable turn of events. If Ripple wins its case or gains regulatory clarity, those bets might pay off big time. Now let's turn to the other giant, Bitcoin. Despite reaching highs earlier this year, Bitcoin has taken a tumble, recently slipping below $104,000. Why? It's less about Bitcoin itself and more about the tectonic plates shifting beneath the global economy. Think of global markets as a spider's web. Tug one thread, and the whole system vibrates. The recent escalation in U.S.-China trade tensions has jolted financial markets across the board. Accusations from the U.S. that China violated tariff agreements have reignited fears of a renewed trade war. And when elephants fight, the grass suffers. Bitcoin, though decentralized and autonomous, still reacts to global financial shocks. Investors seek safety, and in times of uncertainty, many move away from riskier assets, including crypto. Even Ethereum, Solana, and other altcoins have taken hits. Crypto stocks dipped. In short, when the world economy sneezes, digital assets catch a cold. Sentiment analysis shows mixed feelings in the crypto community. Fear and greed index scores hover in the greed territory, suggesting speculative optimism, but trading behavior tells a more cautious story. XRP's long-short ratio remains below 1, signaling that many traders are bracing for further drops. But here's where the analogy of the storm comes full circle. Veteran investors see opportunity in chaos. They remember that after the storm clears, the air is fresh and the horizon wide open. Historically, the best investment opportunities often arise when uncertainty is highest. Remember March 2020? Or even the aftermath of the FTX crash? Those who bought during peak fear were often rewarded handsomely months later. One of the major catalysts on the horizon for XRP is the potential approval of a US-based spot ETF. ETFs act like bridges connecting traditional financial markets with crypto assets. Canada has already approved an XRP ETF, and CME XRP futures are gaining traction. A U.S. ETF could legitimize XRP in the eyes of mainstream investors, think pension funds, asset managers, and banks. Approval of an ETF could be the lifeboat that propels XRP to new heights, especially if the legal case resolves favorably. Some analysts speculate XRP could reach $8 or more by the end of 2025 under such conditions. Despite its recent slide, Bitcoin remains the king of crypto. Its fundamentals are unchanged cap supply, decentralized security, and growing institutional adoption. Some analysts are comparing Bitcoin's current dip to a healthy retracement, like a coiled spring gathering energy for its next leap. The question is not if Bitcoin will rise again, but when. Professional traders are still placing bullish options bets, and large-scale investors are accumulating, albeit quietly. It's a familiar pattern. Those who understand Bitcoin's long-term game are not panicking. So how should you think and act during times like these? Here are some strategies drawn from historical wisdom and current insight. Don't put all your seeds in one soil. Spread your investments across various assets: crypto, stocks, ETFs, maybe even gold or real estate. For XRP, the lawsuit is everything right now. Follow each legal development. Treat it like tracking weather patterns before sailing. Day-to-day charts are noisy. Look at 6-month or 1-year trends. If your investment thesis is sound, short-term dips shouldn't scare you. If you're unsure when to buy, DCA is your best friend. It's like slowly dipping your feet into cold water instead of diving in head first. Like every storm in history, this one too will pass. The cryptocurrency market is maturing, but not without growing pains. Ripple's legal battle could define how regulators approach crypto for the next decade. Bitcoin's price action is a reflection of global forces beyond blockchain, and smart investors know that real wealth is often built in the darkest hours when others are running for cover. As we await the next court ruling and ETF decision, keep your eyes on the horizon. In crypto, the difference between panic and profit is often just patience. If you found this analysis helpful, be sure to like, subscribe, and hit that notification bell so you never miss a crypto update. Let me know in the comments, are you buying the dip or waiting on the sidelines? What's your take on XRP's legal saga and Bitcoin's next move?